Hey there. All right. It's Friday, and we're pretty much at the end of what I had said at the beginning of this week could be one of the most important weeks in all of 2023. And I think that it was. And the reason why I'm saying that is I believe that we got that shift. We've been moving up for 6 months, man. January to July was absolutely an incredible run. We had the opportunity to play big tech week after week, day after day for profits on every single pullback, but now something has shifted. Apple reported yesterday, and there was some good, there was some bad. It wasn't amazing, and as a result, amazing was what was priced into the stock upwards to $198, $199 in its recent high. And so because it wasn't amazing, they had to pull some of that value out. It's trading 32 times its forward PE, which in my view does not make it too expensive. I like Apple, guys, and I'm going to be giving you where I think Apple's going, and I think it's going to be setting up for an opportunity to buy and to get into Apple for another long-term hold. If you have been chasing it or you've had FOMO because Apple's just continued to climb, I believe Apple's going to give us a full correction, which is very healthy for a stock, and it's going to give people an opportunity to get in at a better price before it continues its move higher. I'm going to break down what that better price is for you. I'm going to be covering a handful of the stocks that reported yesterday. I'm going to be giving you guys my reaction, and I'm going to be giving you guys critical levels of support. Sometimes the charts are super clear, and I think that after we saw what we saw this week, the charts have come into focus, and I think that it's kind of clear where we're headed. So we're going to be headed into a correction mode, into a distribution, and in some cases, that's also referred to as a consolidation and even a reaccumulation. I know that's a lot to digest. You're like, Josh, what are you talking about? What I'm talking about is that we're largely looking at an 8 to 10% correction on some of our favorite stocks, which are going to pull us back to key levels of support. I also see the same thing happening in the S&P 500, whether you use the SPY or the SPX chart. What I see is that we have this ascending wedge, which in the long term is actually bearish. But I believe that we're moving into it. As we move into it to the very peak, we'll eventually break likely to the downside, but I believe there's still momentum up. Right now, we're simply going to come from the top of the wedge, the resistance, to the bottom of the wedge, which is support. It's not going to be as far back as a lot of people are concerned about. But because I believe that, I think that a lot of our favorite names are going to be coming down, not a lot, not into a full-blown crash mode, but they're going to be coming down to key levels of support where they're going to be a buy again, and there's going to be another opportunity, another push up on them, which is going to open up another opportunity to make money. I said it in my yesterday's video that we're still operating on a couple buy signals. We're operating on an oversold condition from October and January, and a buy signal from January. All right, that's the big picture. Let's take a look at what the markets have been doing today. The S&P 500 is mixed, and what I want to point out to you guys, which mixed means that there's winners, losers, and companies that are just completely flat. But the two sectors that stand out to me, again, because I've been talking about the fact that we're seeing rotation into more defensive names after 6 months of the markets going up and the Magnificent Seven winning every single day, we're now seeing some money flow out of them. And where has it been flowing into? It looks to me like healthcare and energy are the ones that are performing better today. And so they're going to continue to lead, I think, for the next couple of months. And then over on crypto, we see that it's largely a flat day. ETH is doing pretty good. Solana seems to be a standout. I'm going to be going over my crypto stocks in the very next video. What trades have worked in the last 24 hours? Well, obviously we know that Amazon has worked really, really well. I'm going to be getting into that in just a minute, but I also did 2 trades, one on Google and one on Tesla on yesterday's lows. But let me just tell you guys, I'm locking in profits because I believe these are just volatile movement before a continuation to the downside. I think it's just setting up to begin a sell pattern. Both of those trades turned out pretty good, but I am going to be closing my position before market closes today on both of them, both Google and Tesla. I'm going to just take Monday morning as it comes, and let me just get into some of the companies that reported yesterday and some of the things that we saw. I'm going to start off with Apple. Apple did good. They actually beat the analyst expectation, The big problem, though, is that those are lowered expectations, and this now makes the third quarter in a row where they've seen lower revenue, which is a problem. One of the positive things that we saw coming out of Apple's earnings yesterday is that their services business has now become 25% of their overall business, which was actually pretty incredible, and it shows the future direction of where they're going to be able to get the most profits. I think is going to continue to grow their services business. And then another sector, which is something you don't really think about with Apple because they're a tech and a hardware company, it's their advertising. Advertising is becoming an increasing section of their business. But, you know, every business has headwinds, and so does Apple. There's a news story coming out of the EU, which is that they're going to require every single device to have a battery by 2027. You guys know that, you know, Apple doesn't play that way. They like to have a locked box, a locked system. And EU has said, no, you can't do that. We want our people to be able to replace the battery on their phones. And so it'll be interesting to see how Apple responds to that. One of the other areas of focus that came out of earnings yesterday was just how big the India market is going to be for Apple moving forward. India alone and the growth of their economy and the adoption of Apple products and services, it could represent a new 3% growth in revenue year over year for the next 5 years. And that's another reason why I think that Apple is not too expensive and still has room to the upside. But before it can go up anymore, it's got to come back a little bit. And I think that the support levels that I've begun to identify, I've been telling you guys about 183, and it looks like we're on our way there very quickly. But ultimately, I think that we're going to find truer support between 176 and 177. And I think it's far more likely that we're going to get down to 176 or 177 before we get a chance to get back up and retest 200. So then we've got Coinbase. Now, you guys, if you have been following me and really understanding what I've been saying about Coinbase, I've been saying that I feel it's coming to the end of its road. Now, they came out with a strong revenue beat yesterday, and to be honest with you, when the stock popped up a little bit, I was surprised. I said it in the chat group. I'm like, wow, really? I'm surprised we're not getting a sell-off on Coinbase. But guys, we have seen it down today, and we've seen it going down with a huge increase in volume, which is telling me that Coinbase is just beginning to sell off. So I want you guys to just mark it, make sure that you're hearing me. Coinbase has a lot of concerns. It's had a beautiful run up in recent days, and I know that that's gotten everybody, especially in the retail space, super bullish and excited about the opportunity with Coinbase, but there are some major headwinds, and personally I see this thing going much lower. I'm going to give you guys what that target price is going to be, but let's just kind of take a step back and talk about some of the things they have to overcome. Right now, it's sort of sell the rumor, and then it might be buy the news. And what I mean by that is that you guys know they're under this problem with the SEC is suing them and actually telling them to pull all of their altcoins, which is their bread and butter of their business. Bitcoin is not the most popular coin out there on Coinbase. They need to make money on every single coin, and they need to be adding new coins, and you've got the SEC basically saying stop, and desist. Don't continue to sell these altcoins. That's not been resolved. I personally, as we've already seen the CEO of Coinbase say, that he's not going to comply. He's going to fight this out in court before he starts pulling altcoins from the platform, but it's not resolved. And so we have this ominous bad news story hanging over the stock, which means that it would be sell the rumor that it won't work out well. But then when it does work out well and we get that regulation and they're able to move forward with that and the lawsuit gets put behind us, then it could be buy the news on Coinbase. Then the second issue that we're dealing with over at Coinbase is that they do not expect to be profitable until 2027, and we're not in a high profit window for Coinbase. I think that Coinbase in the long run, as they eventually become profitable and win these battles, could become a very profitable stock. I think we could definitely push up to $200. That's absolutely on the table with Coinbase, and even as high as $300, but we have these problems. I also want to remind you about Coinbase that the shares that have been borrowed short are at 21%, and so there is quite a bit of interest to see this go down before it goes up. So the bottom line on Coinbase, and I'm sorry if it upsets you guys, in my book, at this moment, after the run-up, it's a sell, sell, sell. And the support level that I would be looking at it and considering re-entry would be around $76 minimum. All right, I'm going to break down for you guys and give you some critical levels of support for Amazon, PayPal, and DraftKings in just a minute. But I want to take a station break for the moomoo investment app. If you are out there in Canada, you are now able to register and join the moomoo investment community. You can click on the link in the top pinned comment as well as the description of this video, and it'll allow you to register so that you can begin to get on the app. Now, they're not allowing you to deposit funds or to trade yet. They're opening up their investment app to Canada, and this is a pre-registration. I believe if you go register, there's an opportunity for a gift from them. And when they do open it up for deposits, you're going to be able to deposit $100 and get free stocks and rewards. Right now in the US, you can get up to 16 free stocks as well as a $50 cash bonus. And you guys know I love the moomoo app. I use it every day. Right now, I'm deep in the moomoo app on the earnings calendar. That's my preferred method to keep track of the earnings that are coming up. We've got Sound earnings coming up next Monday, as well as a bunch of other companies. On Sunday, I'm going to try to do a video highlighting the companies that I'm going to be talking about next week. Earnings, we're still in the middle of it, and there's a lot of opportunities to make money. I think the market has shifted direction, but there's going to be different winners and different losers. Right now, there's going to be opportunity. It's just not going to necessarily be in the Magnificent Seven. There's going to be a lot of other companies. I talked with you guys about it with the results that we saw from EVgo. There's going to be some other companies that are totally beat down. They're going to be entering into an opportunity phase, and we're going to be talking about that. That's why I'm going to be continuing to use the moomoo investment app, their earnings calendar, as well as all the other tools that it offers. But you guys know the best part of moomoo is that they've got the Stock Josh family chat group. So you can go, once you're on the app, you can click on the top right corner where you see a bubble with 3 dots. That will allow you to see a search glass. You search Stock Josh Fam. I should pull up and you can join the conversation over there. Get your free stock, get your free gift for those out in Canada. There's an offer there for Australia. It's different than the US. Get your free stuff, start investing, find us in the chat group. All right, let's get into Amazon. Let's have a little bit of a celebration. If you joined me in the Amazon trade, let me know in the chat group if you guys made some money. Amazon was a winner. We've been calling it out for weeks and weeks because I saw the opportunity. This thing, the chart had been setting up with a beautiful sideways consolidation. We talked about the fact that the pullbacks were a fake out, that it was just the tightening of the spring that was going to cause us to shoot all the way up to 140, 142, and that's exactly what it did. The chart hit our target perfectly, and I'm going to tell you guys where it's going next, what I'm doing right now with Amazon, what the potential is, because I think the charts are super clear right now, and I love clear charts. So right now, it went up today. So today, when this thing opened up, there was a lot of people that were wanting to fearfully take profits, but it opened today with a 272% increase in volume. So what does that mean? When a stock is moving up on higher volume, that's sort of a confluence of a green signal that it's doing well. But here's what I'm going to tell you guys. I think that we're going to have some minor pullbacks, and there is the possibility that Amazon can move up to $146. That's actually the original prediction that I gave you guys some weeks back. I began to say that it would largely operate between 122 and 140, 142, but this can hit 146 as an ultimate target. However, I've taken my profits, right? And I'm going to explain to you guys what exactly I'm doing and why and where I see support. I've been saying at the intro of this video that we're going to see an 8 to 10% correction, I think, between August and September. Now, I don't know. If something shifts and changes, I'll tell you guys, but I'm pricing in a pullback on all of big tech, and Amazon is part of that. Now, if Amazon pulled back between 8 to 10%, it would simply make its previous resistance support. That's how technicals work. I say it almost every day on this channel that what once was resistance, once we break above it, should become support. And when it bounces and holds support, that's the clear confirmation that it can go much, much higher. And so let's look at where we would be if 142 was the ultimate top. Really, we hit 143. And I want to point out that as of this conversation, we could be forming a double top at 143, which would be bearish. It'd be telling you that it's going to begin to slow down. If we were to have a 9.8% correction off of 142, which was my advised sell target for swing trades, not for your overall Amazon position, then we could get a pullback. If we're going to get a 9.8% pullback, we could get a pullback to $128, which would make a ton of sense. But if we got up to 146 between now and the next handful of trading days, that would be a very reasonable spot for Amazon to hit. That would leave our support at 131. Both 128 and 131, you guys can clearly see that over the last 6 weeks has been critical resistance. And so if we go up a little bit more, then it means that we'll find a better support at 131. If we were to pull back now, it means that we'll find a better support at 128. And I absolutely think that that's what Amazon's going to do. Now, Amazon is doing really well. They had a great quarter, and they gave phenomenal forward guidance. They said that we're going to continue to do well. This is just the beginning, and the next quarter looks even better. And so let's not underestimate. I'm going to watch Amazon. I'm not going to take a short on Amazon or buy any puts on Amazon just yet. I want to see how it performs between 143, if it takes the time to get up to 146. But ultimately, this massive move will have to be digested. And I think if the markets are trending down, I think that there'll be some profit taking on Amazon as well, which should bring us back to 131. And to me, that would be an ideal spot for re-entry to go long for the latter half of this year. All right, let's get into PayPal. PayPal reported yesterday, and all I have to tell you guys is I get asked about PayPal a lot. I get asked about PayPal every single video, and I have been getting asked about PayPal every video, every day, every week for months. And I've consistently said for months and months, PayPal, no good. PayPal getting beat down. Wall Street does not like PayPal. Wall Street selling PayPal. The chart is terrible. And I've said, guys, it's not time to try to catch the falling knife on PayPal. I've said that so many times. They came out yesterday and you see a massive sell-off. Obviously, Wall Street sees that PayPal has some problems. I've identified that there could be some correlation with future regulation, could be some correlation with the Fed Now dollar coming out. But the bottom line is that Wall Street knows what the problem is, and Wall Street's not buying PayPal. They're selling PayPal with increased volume. And here's the two levels of support that I think it's important that you guys accept. If you're a PayPal buyer or a PayPal investor, PayPal's got support at its previous all-time low at $59. So that's a historic support, and if we're going to continue to fall, that's where I would expect it to fall. If we were to bounce at $59, then it would be called a double bottom, and it could be making a bottom moving forward, right? But if that were to break the next level of support, and that's something I think you guys need to hear, is the next real level of support under 59 is 45, and that takes you all the way back to 2016 prices. So 59 seems to be the target right now for PayPal, and we have to see if it respects 59. If it bounces at 59, then we could begin to talk about PayPal forming a bottom and potentially moving higher. But right now, Wall Street does not like this stock, and I just want you guys to be careful with it. All right, let's talk about DraftKings. This has been a winning play for quite a while. They came out yesterday with earnings, and they did great. So where is this thing going? Well, if we get a break above $32.70, now right now, that's resistance. $32.70 is what would be referred to as a sell zone. But with the momentum that they've got, the chart is looking good. If we were to get a close above $32.70, then there would be what I'd call a squeeze, because what will happen at $32.70 is that the bears will pile on shorts right there. But if the bulls push through $32.70, then the bears will be forced to close, squeezing the stock higher. Where could it go? It could go all the way up to $38. And so DraftKings, we're going to be watching the $32.70 level super carefully to see if we do get a momentum move above it, because we would go much higher all the way to $38. But where is support for DraftKings? Well, DraftKings is going to find critical support at $26.30. So if there is a fail at $32.70, I would expect it to come all the way back to the $26.30 level to find support, regroup, and make another push up to test 32.70. We got to watch it for the next couple days to see what happens at that critical $32.70 level. I'm telling you, mark my words, that's going to be the deciding line. All right, guys, that's it for today. As always, I didn't really give you my intro. I didn't say this is the Stocks with Josh show, but it is the Stocks with Josh show, and thank you guys for hitting the like. If you're new to the page and you're looking for these key levels of support, these stock predictions, and just for me to share my trades with you guys, what's winning, what's not working, then you got to hit that subscribe button, join the community. Join the community here and join the community over on the moomoo app with the chat group where we talk about stocks. We were live when Amazon was reporting. We were celebrating when it was popping up. And then when Apple reported, there was this 2-second initial flash up. And with all the enthusiasm from Amazon, it appeared that Apple might be on the move. And then that thing just sold, man. The sellers had their finger on the button and it just flashed down. I just will briefly cover that when it came back up to 191, that was the level to basically get out, and from there we've continued to fall. You guys remember I told you I was in puts. On Monday I told you I was in puts. On Wednesday I told you I added to my position of puts, and so I'm going to hold those puts until we get down to those lower levels, 183 and below 183 down to the 170s. I'm going to be holding them. I've got puts for August and September, and I've added and I'm going to add to them when the stock moves up, because I think that's the direction that we're going right now. But we are going to have, don't panic sell anything, guys. There's going to be these moments where it moves back up, just like what happened with Tesla. It flashed beneath 260 and it came down to 252. Ultimately, I think it's going down to 245, but we came back up above 260. When we get back below 260, it's just going to be a second confirmation that we are going lower to 245. But I'm going to run fresh technicals for you guys on Tesla in this coming week. And if you don't want to miss it, then you got to hit that subscribe button. Hit the all YouTube notification bell as well. Hope you guys have a great weekend. Crypto videos coming up tomorrow. Peace and blessings. Take care. See you then.